system. No, I must place the unions in proper participation.
Hello and welcome to the program. So Nigeria is officially in a recession. The National Bureau of Statistics released the much anticipated GDP figures for the second quarter last week, and unsurprisingly, the country recorded a negative growth of minus 2.06%. Now, the GDP figure for the first quarter was minus 0.36%. Now, because Nigeria has recorded two negative growths consecutively, in other words, back to back, the country is now in a recession. That's how economists define it. Well, the new figure is not surprising because everyone expected it, including the government. Nigeria has been battling a severe revenue shortfall as a result of the sustained fall in the price of crude oil, which is the engine that keeps the Nigerian economy running. Oil money drives virtually everything in this country, and so when prices dropped in the global market, the country would naturally catch cold. And too bad, Nigeria can do almost nothing about the price of the commodity. And what even made the country's case worse is that not only did oil prices drop, militants in the Niger Delta region, where the bulk of Nigeria's oil comes from, made sure the country did not meet its production projection of 2.3 million barrels per day. The militants just kept bombing oil and gas installations at will. The country is now being confronted with a grim picture. Most states are owing their workers for up to 6 months as allocations from the Federation account has dropped significantly. The country is battling a severe shortage of foreign exchange, which has piled enormous pressure on the naira. And the reason is pretty simple. Nigeria no longer earns enough forex it could use to keep its naira stable. The major source of its forex earnings is oil, and with what is happening in that sector, not much is coming in terms of raw dollars, if you like. So it's a tough one for the country, and of course, here is what the Minister of Finance, Kemi Adeosun, had to say after the new GDP figure was released.
I think the first thing to say is that this administration has always been honest. Even before the NBS came out with statistics, we said, look, technically we think we're in recession. Absolutely. We didn't wait for the NBS to come and confirm it, because the first part of having a strategy is to know your situation. The situation was showing us that, look, it's negative. So we came out, I think I came out last month at the Senate and said, look, we're technically in recession. Let's start having this discussion so that we now know how to get ourselves out of it. And that's what I would like to focus on. Now, the question about inflation at 17.1. Our sense on the inflation, if you dimension that what's causing this inflation, is what we call cost-push inflation. That is, because the exchange rate has changed, because petrol price has changed, that has changed the prices of goods, because that transmits itself into pricing. It costs more to move goods, and therefore the sale price of goods has gone up. It is cost-push inflation. Now, when you have cost-push inflation, it is unlikely, it's structural inflation. It is not going to respond to monetary policy tools, such as increasing the rate of interest. It will not. We have to address the structural causes of the inflation. And what are those structural causes? And indeed, when we leave here, the next meeting that we're going for is to talk around accelerating the process for concession in the refineries. Why? Because 30% of our FX demand is fuel. Meanwhile, we export crude, but we import our fuel, which makes no sense. If we get the refineries working, we can begin to address the structural components of inflation, and that's what we're trying to do. The other thing to mention is that the trend, the rate of inflation growth has slowed down, and that's a good sign, because as we're coming in, and again, looking at the components, what were the components that drove it? It was power costs, it was food price. That's really where it's hurting people in the pocket. You've heard from the Minister of Agriculture, and the NBS statistics have confirmed it. Agricultural output is increasing. That's extremely good news. The other good news in those fairly sobering results was solid minerals output is increasing. So what are we saying? The structural things that we said we are doing are beginning to work. We just need to be very patient. The more fundamental question, are we confused about the economy? Let me start off by explaining and contexting where we are. We found out, first thing is, you don't just wake up and find yourself in recession. It is a process. We have been heading in this direction for the last 6 years. What accelerated it was the drop in oil prices. And there's no getting away from it. At a time when the global economy too is in trouble. So it's the worst possible time for us. Are we confused? Absolutely not. We have said from the beginning, how are we going to get ourselves out of this recession? One, we must make sure that we diversify our economy. We cannot, there are too many of us to keep on relying on oil. And we can see what's happened at the output data on the oil and gas sector. What's happened in the Niger Delta has dragged down the GDP of the entire economy. We're too dependent on oil. Whereas 87% of our GDP is non-oil. It is solid minerals, it is agriculture. So let us drive those other areas. And therefore the discovery of nickel, very exciting. Very exciting. That has nothing to do with oil. That's an export commodity. And we have huge quantities discovered. Now, what does it need? You see, the thing with the oil industry is it's quite easy to do. It's almost like lazy money. It's a small area. You just pump up the oil and put it onto ships. It's a lot more difficult to grow your solid minerals and agriculture. But we're putting together all the enabling environment for that. Rail. We're working right now on resuscitating the old rail line just to run freight. It's too slow for passengers, but we can use it for freight. What does that mean? That means that some of the agricultural produce that is currently rotting can be put onto trains, moved down to where it can be processed much more cheaply than currently. Remember, most of our produce moves on the roads, and you all know the condition of our roads. Why are we here? Because all we were doing was pumping the oil and using the money on recurrent expenditure. We were not investing. The NBS statistics are clearly showing that the level of investment has gone up. So we're moving away from consumption into investment. What does investment do? It's permanent. If you build a road, it's there for 40 years. If you build railway, this railway we want to revive was done in the colonial days, and it's still there. So we have to invest in capital. That is what this administration had said was our economic strategy. No, we're not confused. The times are confusing, but we are not confused. We're extremely focused. We know that if we can just bear and get through this difficult period, Nigeria is going to be better for it. And I must say, those who are criticizing us, not one person has come up and said, this is what you should do. No, all they're saying is, we don't like what we see. And we don't like it either, but it's inevitable. For as long as we rely on oil, and the price of oil remains low, and the quantity of oil remains low, we can't grow. So we've got to grow our non-oil economy. And that's more difficult to do. That means fixing the roads. That means fixing the rail. That means doing our airports. And all the money we've released is going towards those capital projects. And we're very, very, very protective of ensuring that the capital money expenditure released goes to the right things. Even look today at the type of contracts we're letting. Those are jobs being created. Real jobs in the University of Lagos, in the University of Ibadan. Those are jobs. We're not letting contracts for sensitization. We're not letting contracts for, jamboree and wasteful things. We're letting contracts for capital projects. And that's what's going to get this economy moving. So I think that we have a long way to go. We're not confused and we're not deceiving ourselves that everything is rosy. It's not. It's a difficult time for Nigeria, but I think Nigeria is in the right hands. And if we can stick with our strategy, we still have some adjustments to make. I think we need to make some adjustments in monetary policy. It's quite clear we do, and we will do that. We're working on that. We need to try and find a way to support the manufacturing sector better, and we will do that. But look at all the things we've done. We've invested in capital. We have stabilized a lot of the state governments to enable them to pay salaries with the budget support program. Some states had not paid salaries for 6 months. Now they're able to at least begin to pay again. So there's a lot of hope in what we're doing, but it's a difficult time. And the alternative is what? To do what we've been doing in the past and push the problem down the line for the next generation. We've chosen not to do that. It's not the most popular route, but it's the right route. So we're not confused, we're optimistic.
Well, that was Finance Minister Kemi Adeosun speaking shortly after the Nigerian Bureau of Statistics released the new GDP figures. Let me bring in a financial expert now to help us dissect the numbers in the new GDP figures. Johnson Chukwu is an investment banker and managing director of Cowrie Asset Management Limited, an investment firm based in Lagos. Mr. Chukwu, thank you very much for joining us on the program once again. You have seen the new GDP figures. Tell us what you make of what you are seeing.
Well, it was most expected that the GDP would decline. I mean, all the indicators pointed to the direction of a declining, a contracting economy. So it wasn't surprising that the figures were. What happened was that the magnitude of the decline is actually where the surprise came from. I was expecting that we could have a decline of still less than 100 basis points. We saw a decline of 206 basis points, which is quite massive by every world standard. If you look at countries that are contracting or where GDPs are declining, you talk of GDP decline of less than 1%. But in our own instance, in the second quarter, our economy contracted by 2.06%. And unfortunately, we are yet to see a very coordinated response to that. The government has come out to assure us that the GDP will restart growth or will resume growth in third quarter, but we need to see that a clear policy direction. We need to see the path that will trigger a recovery in the economy. We have not seen that, and that's what we're looking at for. And I think the government's job is well cut out for it. It's time for us to have a harmonized monetary and fiscal policy environment where we could be talking of injecting liquidity into the economy.
Back to the GDP numbers now. Let's take a look at, you know, the various sectors now. You take a look at those numbers. You look at, for instance, the figure, for instance, for the oil sector, quite bad. And most people will say it is the oil sector that's actually dragging us down because, you know, first is we're not making as much as we used to make from oil. Second is that production level has actually gone down as a result of militancy in the Niger Delta region. So, and you look at other sectors too that have not done well in the past quarter. They seem to be directly or indirectly tied to the oil sector.
Well, yeah, to some extent, but if you cast your mind back to the previous the performance of the GDP on sectorial basis in the past 1 year, you realize that the oil sector has always been declining. We've seen a quarter-on-quarter decline in the oil sector. Yes, the decline in the second quarter of 17.45% was quite huge compared to what we used to have of less than 4% decline in the oil sector. But the oil sector has been declining for a long time. The oil sector has a multiplier effect on the economy, manufacturing sector. But the key things are this. Yes, we are dealing with a decline in the oil sector that has affected the flow of or the supply of foreign currency to the economy. But beyond that, if we have a clear and articulate policy environment, we could actually reduce the impact of the oil sector on the manufacturing sector. The manufacturing sector declined in the second quarter of the year. Interestingly, the ICT sector also declined in the second quarter of the year. For me, that's actually worrisome because the ICT sector has been one of the growth sectors we've seen. It previously was growing at 12–13% quarter on quarter. But we're now seeing a shrinking ICT sector. And that, for me, speaks volumes of the policy environment we are. We should ask ourselves, what are the reasons why the ICT sector is also declining? I don't think it can actually be attributed wholly to the absence of dollar because, to some extent, that sector may not be, it's not tied to dollar inflows or dollar assets. They actually have access to dollar. Most of them are foreign owned. MTN is foreign owned. Airtel is foreign owned. It is like it's foreign owned. Three of the four majors are foreign owned. So they should actually have access to dollar funding if they need that. So I think we need to sit down as a country, and the economic management team, if it does exist, should sit down and come up with policies that will address the slowdown in the economy, beyond just blaming it on export of crude.
Okay, but let's look at it too. Well, it's not all a terrible picture, if you like. I mean, you take a look at the agriculture sector, for instance. We can see that well, there is some kind of growth there, quite positive, and we're seeing some positive results too in the entertainment sector as well, and even in education. Give us your take on those.
Well, the agriculture sector, yes, we saw a growth of about 13% in agriculture. I think 13 to 15% in the agriculture sector. But the agriculture is a unique sector in the sense that it is largely driven by weather conditions. I don't think we can now say an agriculture sector we have today is driven by policy. The policies of the green alternative were just enunciated. I don't think the growth we saw in the agriculture sector had to do with the policies. I think it has to do more with the weather. We've had a favorable weather conditions, and again, previous policies as it relates to rice production may have begun to germinate fruit. I know the previous government and the current government as it stands have clearly said that they want to make sure that we domesticate a lot of the food, our major food that we import like rice. I think we're beginning to see that effect of that. The sugar policy, maybe we're beginning to see effect of that. But give and take, largely the performance in agriculture sector is largely dependent on the weather conditions, because we still practice largely sustainable agriculture. On the entertainment industry, that also grew materially. Yeah, that's actually encouraging. But I can also tell you that that growth will not be sustained if the economy is not growing, because the consumer purchasing power has declined drastically, and those who purchase the products of the entertainment industry may not have the way without to continue to consume that, unless we are referring to export, which I doubt will be able to sustain the growth we saw in the second quarter. So we need to restart growth. Generally, we need to improve consumer spending so that demand will come back to the economy. Otherwise, even those sectors, apart from agriculture sector that is largely weather dependent, the entertainment industry may not sustain its growth. But it was cheering that we saw that growth, and like you said, it's not all glooms. So what we should be looking at, what do we need to do to continue to grow the sectors that are growing and to reverse the decline in those sectors that are declining?
But overall, I mean, you take a look at the inflation figure. Well, not a dramatic rise as we had actually feared, not a dramatic rise. And you also take a look at the unemployment figure, of course, quite worrying, you would agree.
Yeah, because if you look at the sector that actually drive employment, the manufacturing sector is declining. And yes, we saw a growth of 3% in construction industry, but that's also quite low. The manufacturing industry going into decline, the telecom sector going into decline. These are sectors that have, in the past couple of years, have been the major employer of labor. If you cast your mind back, both sectors account for close to 10%. So the two of them, if you sum of the share of the GDP of the manufacturing sector and the telecom sector, you're talking about 20% of the share of the GDP. And if both of them are in decline, then you can imagine why you can now relate with the reason why the job losses have increased. We have seen, like you mentioned, we've seen unemployment grow from 12.1% to about 13.1%. And we also still seeing, even after the publication, the cut-off date for the publication of the second quarter result, we are seeing a lot more companies retrenching. We've seen 2 airlines shut down operation in the last 1 week. We've also seen the only car manufacturing company in Nigeria, the local car manufacturing company, also threatening to shut down. So those will actually increase further the level of unemployment. If you need to address the issue of employment, you need to address the issue of the manufacturing sector, which accounts for about 9.8% of the GDP. You need to restore growth in the telecom sector, which accounts for about another 10% of the GDP. And then the oil and gas sector does not really account for so much of the employment we have in the economy. But those two sectors of telecoms and manufacturing, which account for 20% of the GDP size, but account for a large proportion of the employment that we generate in the economy, are areas that are critical for restoration of growth and reversal of the increase in unemployment level.
One very quick observation I have to sound you out on is you take a look at the GDP figures. I mean, you get the impression that whether we like it or not, the Nigerian economy is pretty much diversified. I mean, look at the contribution of oil to GDP. It's quite minimal. And the other sectors, the non-oil sectors, all amounting to about 90-something%. And but these non-oil sectors are not bringing in the quantum of money that is coming from oil. So what exactly is the problem? Because whether we like it or not, from the GDP figures we can see, it appears this economy is very much diversified.
Yes, to a large extent, the Nigerian economy is a lot more diversified than what people imagine or people think, because a lot of time people think it's all about oil. But in that diversification, in terms of productivity, production or productive activities, the GDP is diversified. In terms of earnings, foreign exchange earnings is not diversified, it's highly concentrated. Oil still accounts for about 90% of our foreign exchange earnings. But in terms of in contribution to the GDP. Oil accounts for less than 15% of our GDP. But the key things are this. Those sectors have not matured to the point that they become foreign exchange earners. Like the entertainment industry should be foreign exchange earners in the medium to long term if we really do the right things to support them. The agricultural sector, once we have more vibrant agricultural sector and we develop the process of preservation of food and storage of agricultural products, we should begin to think of how do we export our agricultural products. The manufacturing sector will take a long time to become an export-driven sector because of the cost of production in the country, which is not competitive compared to what they have in other countries, or the cost of doing business in the country. But the key things are, look, we have an economy in terms of productive base that is largely diversified, but in terms of foreign exchange earnings, it's concentrated on oil and gas. And those are the challenges we have when we talk of foreign exchange earnings, that we need to grow those other sectors, like I mentioned, the entertainment industry, the telecom sector, because we have a lot of creative young men and women here that are writing programs that we need to find ways to encourage them. We saw Mark Zuckerberg, the founder of Facebook here, and they visited a lot of hotspots for telecoms incubation. We need to make sure that sector does not go into a recession. It should be a sector that should be growing.
Very quickly before we go, before I let you go, could you just give me your forecast for the next quarter?
Well, all things being equal, unless there's a miracle, we should expect that the GDP will actually still contract. But I doubt if the contraction will be as severe as what we saw in the second quarter. I think government has been spoiled, and I believe they should respond appropriately. So if that happens, we should see still a contraction, but not as deep as a 206 basis point contraction.
All right, Mr. Johnson Chukwu, thank you very much for joining us on the program. Okay, we'll take a short break, and when we come back, we'll be discussing something else. Every day, every hour, and every minute, news break in Nigeria. Things happen so fast, it's most times difficult to track and comprehend them. But that's what we do right here on DEJI360. 2015, would you want to come back again?
It's like asking Jesus Christ if he knew he was going to die, will you want to come back as the savior of the world again?
We do not just help you track the stories, we break them down, explore all the angles, analyze the issues so that you can fully comprehend the stories and use them to make the right decisions.